Hi everybody and welcome back to my YouTube channel. I am so excited to have you here with me today. So for those of you who don't know me, my name is Rachel and I am a TEDx speaker, I'm an author, I'm a business owner, but most importantly for today, I am an accountant. I run the Instagram platform Accountant She, which is accountant_she. So I would absolutely love to see you over there where you can keep up to date with exactly what I'm up to behind the scenes. And I am really excited today to be talking to you guys about how to read and understand a set of accounts. So I run a chartered accountancy practice, and one of the fundamentals of accountancy and one of the best bits of our job is really helping business owners to read, understand and feel confident when reviewing their accounts. So what I'm going to do today is actually talk you through page by page and step by step a set of accounts. So if you've been sent your accounts by your accountant to review and sign, you can have me on one screen, your accounts on the other, and I'm going to talk you through exactly what each bit, each section, each page, and each important signature means, what it means for the business and what it means for you. So let's get cracking. So what I'm going to do today is I'm going to run you through the full set of accounts. And when I say the full set of accounts, I mean the accounts that are available to you as the business owner. So these are the accounts that your accountant will ask you to review and sign. The set of accounts that are actually available for all limited companies on Companies House are different. They're much more restricted. And depending on which reporting framework your accountant has elected to use will depend on which elements and which part of your accounts are available online. But the financial reporting framework that applies to all UK entities when preparing their accounts is actually set out in a document called the UK Financial Reporting Requirements, more commonly known as FRS. And it actually, what that document does is set out 5 different options for preparing statutory and financial accounts. So the 2 frameworks that we're going to be running through today are FRS 102 and FRS 105, which are the 2 frameworks used to declare and showcase accounts for small and micro entities. It's important to say here not to get overwhelmed, and that as a small business owner, the decision on which reporting frameworks to use definitely sits on your accountant, and they will guide you and tell you which framework has been used. So if you're watching this video, as long as your turnover is less than 10.2 million, your gross assets are less than 5.1 million, and you have 50 employees or less, then this is the right video for you, and the accounts that I'm going to be showing you today will match the accounts that you've got. If your turnover is over 10.2 million, we call that a champagne problem, and you can chat to your accountant about how to read and understand your accounts. So the FRS and the reporting standards for you as a business owner isn't something to get really caught up over. It's just a really important part of understanding how we have prepared your accounts as accountants, and I just wanted to make you guys aware of it. So if you do have questions about the reporting standards that your accountant has used, do just reach out to us and we can talk to you about how and why we've got to that decision. So before we get stuck into the set of accounts that I've prepared to show you today, there's 2 things that I really wanted to talk to you about. So the first thing is that when your accountant is asking you to review and sign off your statutory accounts, it is not a trick question. We're just asking you to run through the accounts and confirm that they are accurate, that they include all of the income and all of the expenses that you've incurred during the year, and that you're happy as the director and the shareholder of the company for us to file those accounts with HMRC and with Companies House on your behalf. Yeah, so that was the first thing. It is not a trick question, it's not a loaded question. We're just asking you to run through the accounts, make sure that you're really happy and comfortable with what's been done so far, and flag anything that doesn't quite look right. The second thing is that as a business owner, it is really important to feel happy and comfortable when you're signing off accounts. And if there's a number that you're not sure of, or a report that you're not quite sure what it is, it's really important to ask us. It's our job to help and guide you to make sure that you're really, really happy with the work that's been done, because at the end of the day, that is what you pay us for. So the first thing is just to make sure that you know it's not trick questions. And the second thing is to make sure that you are really, really happy and comfortable with the work that's been done and that you understand the numbers. Okay, so let's go. Okay, so this is the set of accounts that I've prepared for you today. Within our practice, on every piece of software we always set up a demo person called Testy McTesterson, and we just use that as a demo account and how to show people. So I couldn't create a test set of accounts and not call it Testy McTesterson. So these are the annual accounts for Testy McTesterson Limited. Page 1, when you open up your accounts, just states the name of the limited company, what the document is, and the end of the financial year. So page 1 is pretty straightforward, and it really is just a cover page. Page 2, we've got a contents page, which just helps you reference which document and which report is which, so nothing to panic about here. Okay, so page 3 is your company information. It states the name of the directors, the name of the shareholders, the company number, and the registered office of the business. So the first thing that we are asking you to do is to just review that information and check that it's correct. Sometimes people change address during the year, so this is just a quick summary for you to check that all of the information that we've drafted on those set of accounts is correct. So that's all we're asking you to do on page 3. Page 4 is a director's report. So this states the directors listed during the year. It'll also state any changes to the directorship, when people were appointed, and when people stepped down as directors. But if there's been no changes during the year, you can consider that a little tick, and that section is correct. The statement of directors' responsibilities really just outlines for you as the person that's signing the accounts exactly what we're asking you to sign. It's also just reminding you of your responsibilities and flagging which reporting guidelines we have used to prepare the accounts. So this signature page is asking you to sign off the accounts. So let's carry on all the way through before you will make that decision on whether or not you are happy to say yes. Page 5 is our page. So this is the Chartered Accountants report, and that is you are paying us to prepare you with a chartered set of accounts. So this page firstly certifies that we are chartered accountants, and secondly outlines our responsibilities, and we sign this page. Page 6. So this is an income statement, which is a brief overview of your profit and loss report. So don't panic. Later on in this document, there's a full breakdown of all of these numbers. But this report really is just a bird's eye view of exactly what your turnover was, any other income, your direct costs, depreciation, and your overheads were through the year, and then that all important figure, tax and profit. So this is an overview, and later on we'll see a full breakdown of all of these numbers. So if on this page you've got some questions surrounding like what exactly is included in that figure, or how have you got to this number, hold your horses and bear with me. So next up, on page 7, we've got the statement of financial position. You might have also heard this referred to as a balance sheet. And if you use accounting software, the balance sheet is this report. So the statement of financial position, or the balance sheet, is different to the profit and loss. So the profit and loss report really looks at this financial year, the income, the expenditure, and what has happened during that 12-month period. The statement of financial position, or the balance sheet, is really looking at much more of a long-term perspective. So the balance sheet looks at your assets and your liabilities. So things that the company will hold for the next 12 months or longer, and the profit and loss is looking at what happened in this period. So within the statement of financial position, we have fixed assets. Those are items that are fixed assets that we've capitalized during the year. And again, most business owners have a pretty good understanding of what the fixed assets of their business are. Something that quite a few business owners don't know is that the figure that we hold on the balance sheet under fixed assets isn't just the purchase price of your assets, it's the purchase price of your assets less the accumulated depreciation. So we as accountants depreciate fixed assets each year to release the part of the asset that has been utilized in that financial year. So if, for example, you saw this number and it looked wrong, it's important to remember that this number is actually the net book value of your assets. So it's what you paid for it, less the depreciation so far. So each year it's our job to make sure that the fixed asset figure is what the value of that asset is to you at this point in time. Next up, we've got current assets, and these differ from fixed assets because they are current. And by current, we mean that it is reasonable to assume that this asset will be used within 12 months of the reporting date. So the most common thing that we see in here are bank accounts. Next up, we've got prepayments and accrued income, and that's where it's our job as accountants to just make sure that all of the income and all of the expenses are being reported and accounted for in the correct period. And again, if you'd like to know what's included in that number, just ask us. So creditors. So next up, we've got the creditors line, and included in here is our debts and payments that are due within 12 months. So the most common ones to see in here are your creditors, so people who've invoiced you but you've not yet paid, and also tax liabilities. So corporation tax and VAT along with PAYE will fall into this creditors section. And again, if you'd like a breakdown of what that number is, you can either run the report on your accounting software or you can ask your accountant. And then because we prepare your accounts using something called double entry, which means that every debit must have a credit, we can always make sure that your net assets is equal to the capital and reserves within your company. So that is the reserves that are available plus any share capital. Then we've got the notes to accompany the accounts, and these notes can vary depending on your business and anything that we need to put in as supporting information to explain some numbers. So these two notes are the most common and the most that you're likely to see. The first just covers off the statutory information again that we've already covered off previously in this document. And the second is the average number of employees. Again, it's just your responsibility to run through the numbers, make sure that not only this year's numbers are correct, but also the comparative years. And don't forget, if you do have any questions, you can ask for some more information or use your accounting software, because these numbers will exactly match your accounting software. So next page, and this is actually the last page. I really hope this hasn't been as traumatic as you thought it might be. This page is the detailed income statement. So earlier in the video, earlier in this set of accounts, we covered something called the income statement, and this is the full breakdown that I know you were after. The income statement that we saw previously was a bird's eye view of exactly what was going on, and this is a really, really detailed version of those numbers. So all of the numbers feed through into exactly the same report. They're all the same numbers, but this shows a full breakdown of those numbers. So for example, the staff costs figure is actually broken down here into wages and salaries, director salaries, staff entertainment, and staff travel. So if there was a number in the income statement previously that you weren't quite sure on, this should answer any questions that you've got. But again, if it doesn't, you can run a profit and loss report on your accounting software, so Xero or QuickBooks, and then have this in front of you as well. And those numbers will exactly match. And again, on QuickBooks or Xero, those numbers are drillable. So if, for example, you thought that the sales figure, you weren't quite sure what made up that figure, if you run a profit and loss report on Xero or QuickBooks, you can click into that number and see exactly what's happened, any changes that we might have made, or the breakdown included in that number. So again, what we're asking you to do when you're reviewing and signing the set of accounts, specifically on this page, is that you are happy and comfortable that all of the income and all of the expenses that you've incurred during the year have been accurately captured on this page and in the financial information that you've provided us with. So that's it. That is start to finish your set of accounts. We have the company information, we have a director's report, which is you signing off the accounts to say that you're now happy, having reviewed the accounts, that everything's been captured, they're accurate, and that you're comfortable with the numbers. Next up, we've got the accountant's report, and that is us advising who we are and how people can contact us, the registration number of our reporting body, and the fact that we have signed off and verified the accounts. From there, the pages really do go into the numbers. So we've got the income statement, then we've got the statement of financial position, and then we've got the detailed income statement. And as long as you're happy with that information, you can let your accountant know. I really hope this video has been helpful for you. We see a lot of small business owners, and specifically new business owners, who feel quite daunted or overwhelmed at the thought of signing off their accounts. We really wanted to create a resource that you can flow through this information with me, follow it through from page 1 all the way through the accounts, and really get an understanding and some guidance on what we're asking you to do when you're actually signing off the accounts. Please let me know if this has helped you or made your life easier. I'd love to hear from you. As always, I absolutely love it. I do a happy dance every time I get a new subscriber. So I'd absolutely love it if you could like the video, if you liked it, comment, let me know what you thought, and subscribe to my channel. Thank you so much for joining me today, and have a great day.